Hey traders, welcome to Charts and Coffee. Oh, that's good. Yeah, that's super good. Hope everyone's having a great Tuesday morning. Thanks as always for joining me for our little morning show here as we prepare for the trading day. A couple things. We do have quite a few hot zones that we're going to be dealing with. This is really, for all intents and purposes, the beginning of our week because yesterday we had many bank holidays around the world. So in terms of global full participation, today's the first day. We have a lot of housing data coming out this week as well. And I think what's interesting about that is just how much emphasis I've had in ITB, XHB, even XLRE. And so we're going to use that data to help us see if, help us, well, one, get the timing down. And we need the patience to wait for that volatility to close the distance to our entry zones, right? Everything's about those entry zones and waiting for price action to come to us, waiting for our pitch, right? So that's really where the focus is this week. And then when we kind of zoom out a little bit further past maybe the housing data, we know we've got plenty of earnings we can use in a similar way. Are there setups that if we were to see specific amounts of volatility, whether that be the expected range, whether that be the historical range, are we seeing those moves close the distance to our entry zones? All right. So without any further ado, let's just jump on in to our questions. All right. Because after all, this is what the show is all about. All right. So kicking it off, Robert, good morning. Is it time to make an entry? Hang on, let me move this screen around a little bit. Is it time to make an entry? And Robert, where did your question go? There we go. In XLP. All right, let's take a look at XLP. So staples themselves, Robert, don't have a ton of clarity in terms of the uptrend that's pretty new, but at least that's some clarity, right? It's a fairly what I would call fresh uptrend. We've been in an uptrend since the 11th. So what, 8 days ago, right? So now, to your point, could we set up a pullback? I would not likely look at a pullback till we get closer to the 21 exponential or one of these previous Darvis levels. So the ones that are coming to mind, and if you don't have the Darvis on your charts, head on over to countdowntrader.com and download the free version that we have there for you all. Easy peasy. And you'll be able to kind of do what I did there. Just take the previous Darvis levels, just extend them across and see what zone that creates. That's one of the ways, by the way, I identify the zones that I want to take advantage of. So I would look for that pullback down into that area, use those previous Darvis. Gang, this is the easiest way to use a time-tested support and resistance sort of automation, right? That's really what we've done. We've automated and modernized Darvis. This is not classic Darvis. It's the same idea. We pay homage because that's where the idea came from, but it's modernized to not limit ourselves to simply looking for 52-week breakouts. So that would be the zone that I would keep an eye on. You see how easily we were able to identify that zone with the Darvis. And so I like XLP on a pullback, so good eye. And then if we take it out to here we go. So let's go to XLP, the multi-chart, right? I know a lot of you had questions about the multi-chart from our Sunday weekly live show and the Sunday notes. Gang, this is what do they call this? A flexi grid, a flexible grid? That's all this is. There's no fancy schmancy, nothing. This is just taking some time and putting my particular set of indicators on this layout so I can look at the relative performance. This is, for me, the absolute best way to get a read on relative performance. So it's a flexi grid, and the tide, the index, the sectors in the upper left-hand corner, and then the 11 smaller charts are the order in which the stocks are weighted in that ETF or in that index. So Costco, any of them that are double green, Robert, any of them are double green as they pull back, just be aware of the proximity to earnings. So we have a great 642 earnings window explainer. If we have an uptrend or even a downtrend, but it has to be a trend into earnings, I start looking at that 6 weeks out before earnings. I really want to be in a position to start thinking about entries at least 4 weeks out. And I will stop entering 2 weeks out. That's where the 642 comes from. When do we start scanning? When do we really want to get serious about the entry? And when do we stop entering? And so if you head on over to Countdown Trader, there's a total write-up that Trish has done on the 642 explaining quite frankly, detail by detail, what it is we do with earnings. So check that out. I think you'll really like that, because in this tail wags the dog season, we might have a number of double greens, but they may not necessarily be the ones that we can take advantage of because of that window closing to that volatility event, to that hot zone, right? Any scheduled economic event could be housing, could be, housing, it could be non-farm payroll. I'm just thinking of what we have coming up, or this week even. It could be any FOMC event. If it's scheduled and we know the market's keeping an eye on it, then we know it's something that's going to have a reaction. Of course, we can't really pre-position ourselves in front of an event we don't know is coming. So it's very important when you're looking at these hot zones, and that's what I call them. Any scheduled high impact, high volatility event, earnings just happens to be one type of hot zone. But keep an eye on that one, because this is the season. All right, Josh, good morning. Can I please go over agro, moderate, conservative entries and how I determine them? So let's go through the definition first. For those of you that may not be familiar with the lingo, agro is simply aggressive, moderate is, less aggressive, and conservative is the last, or the very last part of the zone where I would want to enter. Each one carries with it a certain amount of risk based on the price we pay for the option or the price we pay for the futures contract and the point of validity, or the stop loss. Now, I call stop losses points of validity. Yes, I've made words up, whether that be hot zones, whether that be points of validity. I've made these little phrases up because, to call something a stop loss, it's so movable. It's a suggestion, right? A point of validity, when I fight that, my brain has to say, hey, Rog, you're holding this past validity? Really? So that's why I have these little phrases that help me keep me on track. So each one of those has a certain amount of budget that's associated with them. So that's why I give them their cutesy little nicknames. It's not a probability conversation. It's about the zone. And then how do I determine the zone? Gosh, everything we do here in Charts and Coffee, Josh, volume, Darvis, propulsion, psychological levels, considering hot zones. It's everything we talk about here in the room. What are those levels? We need a way, ideally, to, settle on what those tools are going to be for you. You all know what mine are, because most of them I give away for free. And the rest of them I either go into detail in the Sector Secrets Mastery, or the Futures Room, or in the Options Room. So you know what the tools are. And I think that the first thing is everyone needs to settle on what their tools are going to be. And then really what we're doing is trying to find levels that we are expecting there to be a reaction, right? There should be a high expectation of a reaction. So that means if I can stack a couple of tools. Last Friday, I did a video about the S&P. You all saw me do this last Friday in the free video. And I said, look, the S&P broke down through the 200 propulsion, which is where the 200 exponential is plotting as well. And it broke down through the 50% of the last move, the 50% of the last major move, the rally there. two different ways of finding support, but when those levels stack, we're in shape. So that's what I do, Josh. In a nutshell, that's what I do. All right, next up, Kevin, good morning. TRV, sure. Let's take a look. TRV is dropping, travelers, due to earnings, right? Okay. So I don't play, but like you said, we're waiting for that post event. Love it. So we have this post event. We want to get through earnings. So you can see here, 5:57 a.m. Boy, that's early. And we're going to see that move heading lower. One of the things that you're going to see me do a little bit more often is I won't have the pre-market on my Thinkorswim, because the volatility measuring tool that I use, what I call my HPMRs, the hourly price movement ranges, that indicator works best when we don't have the extended hours. So as it moves lower, the question is, would I look at it as an opportunity? And the answer to that, well, let's see here. Let me turn the equities extended hours back on. And actually, I'll have to go to the 5-minute for that anyway. So you can see we got down to 184. Is that all we've gotten down to? Oh, I clearly don't have the pre-market right now. And I'm not particularly concerned. At 9:30, if we can be at the Darvis, and I don't know what the pre-market is, Kevin. So let me put it this way. If we're above 180 or even preferably 178.80, I will keep an eye on it. Doesn't mean I'll buy it. And if I do, it would definitely be, kind of going back to Josh's question, an aggro budgeted entry. So again, would I look at movement on the heels of earnings as an opportunity? Yes, but it depends on where it's landed. And as you really nicely chosen a market that's heading higher, the 642 earnings, whether it's an uptrend or a downtrend, has to be in a trend. So if it's the earnings that creates the correction, great, we're in really good shape. So the basic answer is, Kevin, yes, but it depends on where it's going to land. Can we take a look at Natty Gas? It might be making a nice little retreat to enter. Gosh, when it comes to Natty, Manuel, we need a whole lot more weakness than this. Yeah, that's just not enough for me personally to get into natural gas. But if we can see a little bit more weakness, then yes, I'm just not going to see just a down day, which is basically taking back the rally from yesterday. But that's just not going to be enough. But you're down at 665. Well, let's do what we did earlier. Let's use the automation of the Darvis. So great. Here's my Darvis back in there, right there, and then there's another one right here. And you notice I like to color code them so I can kind of track back to which Darvis. So that would be my zone right in there. So probably mine's just a smidge lower. And well, it would be, call it 650 to about 630. But yeah, I think we're in the same ballpark. Absolutely. All right. Good morning, Battlehawk. AMT. Sure. Let's jump on over there. AMT at the 21. And really in a pretty fresh but valid uptrend as well. XLRE looks very good. Right. So if we're going to look at the boats and tide, you're in the right ballpark, but then your proximity to earnings, that's where the wheels fall off the wagon. All right. So too close to earnings for me, but great looking structure, Battlehawk. All right. JR asked for, is the chart for FXY is, well, if I may rephrase, bearish, right? Do I think it might be ready for a turnaround soon? JR, so I'm trying to take certain words out of my vocabulary. Good and bad is completely what I think, right? Not what the market's doing. So there's bearish and there's bullish. There's up and there's down. Frankly, in the market, there's no good or bad, right? Okay. So then if I'm bearish, then why, and it's a double red, why would I be concerned about a turnaround, right? So really, it's, for me, the mindset is so important. If I know something's in a downtrend, I'm not worried about a turnaround. I'd like to see a rip, and we'll buy puts into the rip. So do I think it's ready for a turnaround? In a simple answer, JR, no, it's a downtrend. And we're going to presume that's going to be the direction for the foreseeable future until the structure starts to shift. All right. Thanks for the question. Student of Truth. Hello. Interested in the ticker SBSW. Okay. Can't say I'm familiar with that one. It's a platinum, palladium, gold miner. Okay. So thank you for letting me know what it was, because I did not. So thank you. I appreciate that. I would have to say I'm really not keen on it. Well, at least it's above the 200, so it's in the bullish hemisphere. But here's what I will say. If we're looking at miners, I'll start a little bit more broadly with the XMEs and the SLXs and even the GDXs of the world. So when I look at miners and I see the SBSW just sort of going sideways, and generally speaking, miners are in a very strong, if not arguably at this point, parabolic uptrend, that disconnect is enough for me to say thanks, but no thanks. I hope that makes sense. Now, having said that, we could see a rising tide lift all boats, right? So that would be probably the best argument or best nod to SBSW, that the rising tide in this general area would help take it higher too, because it's not doing very well on its own, is it? All right. So what are my thoughts on gold? See, I like gold very much. I mean, our plan has been to focus on long positions. It's still not a double green uptrend. But if we can get down to likely, I'm looking at something around 1925, 1923 and a half. Heck, even if it were to get all the way back down to 1895, but this is a choppy market that just fired off. Take a look right there. There's your slow stochastic. It entered the 20 area on the 14th, stayed up in that 20 area through the 18th. So as that slow stochastic's at that high area, right? At the high area. High is what? It's synonymous for overbought. So it's overbought. It's a ceiling. It's resistance in terms of this market being choppy. And then we get the signal that this is likely going to weaken as we go into today's session. The signal is going to be lagging. The signal is just there to sort of make it obvious, right? That's what it's really there for. It's the line of the stochastic that's there to give you guidance as far as the upper or lower end of the range, the high end, the low end. So if we can keep going lower, maybe when the stochastic hits the halfway mark, the 50%, as opposed, coming off the 80 to the 50, that might be really, really useful. Okay. So thanks for the question. All right, moving on to Euro Aussie. It's a little bit inside baseball on currencies, but as far as Euro Aussie goes, I do like it, because what it would be is a euro short, which I am anyways, but just against the dollar in the FXE or the 6E, and it would be an Aussie buy. The Australian dollar is quite strong. So what you're doing here is this is sort of a double dip, which is cool. I don't talk about Forex pairs that much because many traders do not trade Forex, but it's a very cool double dip. In other words, you're long US dollars by being short euro, and you're long Australian dollar by shorting it against the euro. So you get to double dip in a way where you get to buy two strong currencies and short the weak one. It's actually a really cool currency. Yeah. Benji, I've had my eye on that one. And for those of you that are into currencies and can play more mixes and matches of the different major currencies, the different majors, it's a great one. Double red downtrend. It lets you take advantage of both those narratives. Awesome. Yeah, good stuff. All right. So gang, that is actually, you know what? I have just two questions here. Let me get through these really quick, and then I think I've caught up on the questions. NEE, do I want to buy the 200? Keep an eye on XLU. I'm not there on NEE yet, but keep an eye on XLU. We might be able to find a better outperformer than NEE. And then finally, BA. What's my take on BA? Short it. For the most part, focus on shorting the rips. Yeah, be a little bit more conservative, be aware of earnings, but for the most part, we're talking about short the rips. All right. Okay. Have a great one, gang. Be good to each other. I'll see you tomorrow. Same time, same station. Until then.